Imagine this. You finally make six figures. You feel like you've made it. So one night, you're scrolling through houses online when you see it. The perfect house. 4 bedrooms, beautiful kitchen, big backyard, great neighborhood. And the price, $500,000. You look at your income and think, I can probably afford this. But here's the question almost nobody asks. What if the $500,000 house doesn't actually cost you $500,000? What if the real price is your investments, your free time, your ability to change jobs, your emergency fund, or even your freedom? Because when you buy a house, you're not just buying a building, you're committing a huge part of your future income to one decision. And the most dangerous part? You might not realize how expensive that decision really is until you've already made it. Here's how most people think about buying a house. They see the price, $500,000, then they think about the down payment. Then they think about the monthly mortgage. And if the monthly payment looks manageable, they think, okay, I can afford it. But that's where the illusion begins. Because a house doesn't just have a mortgage. There's property tax, insurance, maintenance, repairs, utilities, closing costs, and all the random expenses that seem to appear the moment you become a homeowner. Your house doesn't care whether your car breaks down. It doesn't care whether your job disappears. It doesn't care whether the stock market crashes. The payment still shows up every month. And that's the first thing most people underestimate. A house doesn't just cost money today. It makes a claim on your future money. Now here's something interesting. A bank may look at your income and decide that you can handle a certain mortgage. But the bank isn't living your life. It doesn't know your goals. It doesn't know that you want to invest every month. It doesn't know that you want to travel. It doesn't know that you want to start a business. It doesn't know that you want to retire early. And it definitely doesn't know what happens if your income suddenly drops. The bank is asking, can you make the payment? You should be asking, can I still build the life I want after making the payment? Those are two completely different questions, and confusing them can be one of the most expensive mistakes you ever make. Now imagine you get a raise. You were making $80,000. Now you're making $110,000. You feel richer. So naturally, you start looking at more expensive houses. Maybe the $300,000 house doesn't look as attractive anymore. Then you see a $400,000 house. Then a $500,000 house. And suddenly, you think, I'm making more money now. Why shouldn't I upgrade? This feels logical. But there's a psychological trap hiding underneath it. Your lifestyle tends to rise with your income. And once your new lifestyle becomes normal, it's very difficult to go backward. The bigger house needs more furniture. The nicer neighborhood may come with higher expenses. The larger house may require more maintenance, and the lifestyle around the house can become just as expensive as the house itself. So that raise you were expecting to make you feel richer can simply make you more expensive to maintain. Your income went up, but your financial freedom didn't necessarily go up with it. Here's where money psychology gets really interesting. We can see someone's house. We can see their car. We can see their clothes. We can see their vacations. But we can't see their emergency fund. We can't see their investment account. We can't see how much debt they have. And we definitely can't see how stressed they are when the paycheck is late. This creates a dangerous illusion. Someone can look incredibly wealthy while being financially fragile, and someone else can look completely ordinary while quietly building serious wealth. That's because wealth is often invisible. A person driving an old car with a large investment portfolio doesn't look rich. A person driving a luxury car with massive monthly payments does. And the same thing can happen with a house. The bigger house might make you look more successful, but it doesn't automatically make you wealthier. Sometimes, it simply makes your financial obligations bigger. But there's an even bigger cost. And this is the one most people never calculate. Maybe even the more impressive neighborhood. But person B has something that isn't visible from the outside. More financial flexibility. They can invest more, save more, build an emergency fund, take a career risk, start a business, or simply keep more cash available for opportunities. Now fast forward 10 years. Both people may own homes, but their financial lives could be completely different because every dollar you put into one decision is a dollar you can't use somewhere else. And that's why the real cost of a house isn't just the money you spend on it, it's also the opportunities you give up because you bought it. Here's another reason houses are different from almost anything else you buy. A $2,000 phone is expensive, but if you hate it, you can replace it. A $3,000 vacation can hurt your bank account, but eventually, it's over. A house is different. It's a long-term commitment. You don't just make one decision. You make the same financial decision again, and again, and again, month after month, year after year. That's why the question shouldn't be, can I afford this house today? It should be, would I still be comfortable owning this house if my life looked completely different 5 years from now? What if you change careers? What if you have children? What if you want to move? What if your income falls? What if an emergency happens? The house doesn't adapt to your life. You have to adapt your life around the house, and that's where a house can quietly become a financial cage. There's one more psychological problem. You don't buy a house in a vacuum. You buy it while watching everyone around you. Your friend buys a bigger house. Your coworker moves into a nicer neighborhood. Someone posts their new kitchen on Instagram. Suddenly, your perfectly comfortable home feels too small. This is social comparison, and it can completely change your definition of what normal looks like. The problem is, your income doesn't automatically increase just because your expectations did. So you upgrade, then upgrade again, and eventually you're no longer buying things because you truly need them. You're buying them because the people around you made them feel normal. That's how lifestyle inflation can quietly turn into lifestyle competition. And there is no finish line, because there will always be someone with a bigger house, a newer car, a better kitchen, a more expensive neighborhood. If you build your financial life around keeping up, you can spend your entire life running. So, should you buy the $500K house? Not necessarily. A $500,000 house can absolutely be a great decision. Before you decide that you can afford that dream house, there's one financial mistake most people never see coming. If you want to learn how to make smarter money decisions, build real wealth, and protect your financial freedom, subscribe to Rahatinvests, because the next video might change the way you think about money, if it fits your income, if you have enough savings, if you can continue investing, if you can handle unexpected expenses. And if the house genuinely improves your life, then buying it may make perfect sense. The problem isn't the number. The problem is buying the maximum lifestyle your income allows. Because there's a difference between, I qualify for this house, and this house fits the life I want. That difference could be worth hundreds of thousands of dollars. So before you buy that dream house, ask yourself 3 questions. Can I afford the total cost? Not just the mortgage. Think about taxes, insurance, maintenance, repairs, utilities, and the unexpected expenses that always appear. Can I still build wealth after buying it? Can you keep investing? Can you maintain an emergency fund? Can you save for retirement? Can you handle a bad year? Because if the house consumes every extra dollar you make, you're not building financial freedom. You're financing a lifestyle. Does this house actually make my life better? Not your Instagram, not your neighbor's opinion, not your family's expectations, your life. Because sometimes the smaller house gives you a bigger life. Here's the idea I want you to remember. When you buy a house, you're not only buying a place to live, you're buying a monthly obligation. You're buying maintenance. You're buying taxes and insurance. You're buying a long-term commitment. And most importantly, you're deciding where your future money will go. That's why the richest-looking choice isn't always the wealthiest choice. A bigger house can give you more space, but a smaller financial obligation can give you more options. And options are what money is really supposed to buy. The option to leave a job you hate. The option to invest when the market falls. The option to help your family. The option to take a break. The option to start something new. The option to say no. That's financial freedom. So the next time you see a beautiful $500,000 house online, don't just ask, "Can I afford the house?" Ask, "Can I afford the life that comes with it?" Because sometimes, the most expensive house isn't the one with the highest price tag. It's the one that quietly costs you your freedom. And that is the real price of a $500,000 house.